let's get in the trenches with oil services. Scott, real quick before we go, I want to get your take on where you think the direction of oil prices is going to go.
Well, right now we've been holding that 95 to 97 area in oil, so I do think that is support. But if we break that, we could easily see 88 to 90. And if this market continues to go lower, they're going to talk about slowdown. They're going to talk about less consumption.
Right.
So we could hit that area. But then once oil starts going lower, they'll talk about how
better
it's
demand.
a stimulus for
Right.
the consumer, that they'll have more money in their pockets. And I think we're in this range. We hit the high end, and now the low end would probably be around 88.
All right, now we talk about oil services a lot. We know that the charts look pretty crummy, but I wanted to see which ones were the ones you need to keep on the watch list, like we did with the cloud computing stocks. Let's start with the easy one, the OIH. Encompass the whole thing. It's a big basket. What do you want to do with this one? Where's that level that would be interesting?
I want to show you the OIHs because we've talked about this a lot. This was a leading group. This is where it had that false breakout at the top, your exit. This was your confirmation as you had a lower high. But right now, if you look where it is, it's above this pivot low. When I showed you the S&Ps, we were at the low. So this group is holding up better. Okay, at this point, I think if you're long, make sure you watch this 144, 145 area. If it breaks that, we can see the 200-day if we get a lot more market pressure. At this point, it is a watch. It is showing some relative strength. So this also would be on the top of my watch list for when this market tries to get some support or bounces.
And what about the individual stocks? I want to hit on Baker Hughes, one of Dan Dicker's favorites, like you just heard. But also, a lot of portfolio managers like this one, which makes me wonder, is it too popular?
Let me take a quick look at this chart because I haven't traded in a while. This one is actually holding up better than some of the others. It's above the moving averages. I think that this one is in the game. And when the market gets better, if it gets above 75, that would be your entry there.
Right. And what about Halliburton? It seemed to sort of find support a little bit yesterday. Would it be time to start looking at this stock?
I was looking at this stock before we had the breakdown, and it looked like it was going to be the first one to make new highs. So this one should be on your list. It's above the moving averages. I don't think you have to be in a rush to buy it, but this also, look how close to the highs this is when the market's under extreme pressure. Just make sure it holds this uptrend, because when these things fall fast, they fall quick. So if it does break this 46.50, 46.70, it might come in some trouble, so make sure it holds that uptrend.
And what about Weatherford? It's sort of the forgotten oil services stock. I know you've not liked it in the past, but again, it's one of the favorites with all the portfolio managers out there.
I feel like every time you bring it up, I'm like, it's ugly, I don't even want to talk about it.
Now I'll force you.
Let's see. What's it? Oh, I don't even know the symbols. That's
WFT.
Okay. Oh, look at that. It's gross. It's below the 200-day. It's moving lower. This big gap down told the story. Here's your retest. It's an avoid still.
Now, real quick, wrapping it up here with this segment, do you think that a possible increase in OPEC supply is already priced into all these stocks in the markets to begin with?
Well, we'll find that out today, won't we?
Good segue.